Hi, welcome back to the Litefinance Global YouTube channel. We are going to have very hot topic for you today, introduction into the Wyckoff Trading Strategy. So, without the further ado, let's jump straight into the video. Okay, before we start, please like and subscribe if you haven't already, and leave the comment in the comment section if you wanna see the continuation of this topic. When it comes to the Wyckoff method, the most important thing is the possibility to recognize accumulation and distribution phases. The Wyckoff method revolves around identifying accumulation and distribution phases in the price chart. Accumulation occurs when large players are buying a stock, and distribution occurs when they are selling. Next important thing is a trend analysis. Wyckoff traders aim to identify the prevailing trend and its trend by analyzing the price structure. In that case, traders are using the most popular tools. They use tools like trend lines and moving averages to help determine the direction of the market. When it comes to the Wyckoff trading method, the next important thing is the volume. Volume analysis is a critical component of the Wyckoff method. Rising or falling volume during the rising or falling market is going to show us different market stages. Increased volume during the price moves is seen as a sign of the institutional interest. A surge in volume during the accumulation can indicate strong buying activity, while high volume during the distribution suggests significant selling pressure. As I mentioned before, the price and volume relationship is going to be the key when it comes to the Wyckoff trading method. The Wyckoff traders look for the specific price and volume relationship to confirm their analysis. And here we have one of the examples where a breakout with increasing volume may signal the start of a new trend. Please notice the phase of the consolidation before this break. That could indicate that there was an accumulation phase. Support and resistance levels is another key thing when it comes to the Wyckoff method. Have a possibility and a strong knowledge how to identify the key support and resistance levels might be the crucial here. So, for some of us, it might look like it's very easy thing, but I strongly encourage you to get even deeper knowledge, to try to dig that even deeper. Why I think it's so important? Because, if you can recognize support and resistance levels, then you might recognize potential price reversals. Wyckoff phases. Here we have the basic example. Wyckoff outlined 4 distinct phases in the price cycle: accumulation, markup, distribution, and markdown. As I mentioned, is a basic, and in real life we might see the things going a little bit different way, but as I mentioned, please leave the comment below if you wanna see the continuation of this topic. The purpose of this video is to make the introduction into that very interesting topic. So, when it comes to the basic scenario, traders aim to enter positions during the accumulation phase and exit during the distribution phase. Relative strength analysis. Wyckoff traders often compare the relative strength of the security they are trading to a broader market index or sector, meaning that if we are interested in the particular stocks, we have to compare to how the rest of that sector or that index behave. If it's done in a proper way, the strong relative strength might be the sign of the future outperformance. Having a deep knowledge when it comes to the chart patterns could be the key here. Wyckoff traders may use chart patterns such as head and shoulders, inverted head and shoulders, double tops, triple tops, double bottoms, triple bottoms to identify potential trend reversals or continuations. Some of the traders using the Wyckoff method are using point and figure charts. Point and figure charts focus on the price movements rather than time, making it easier to spot potential trends or reversals. Once we have everything in place when it comes to the comprehensive analysis, we can decide on entry and exit points when it comes to our trades. From the risk management perspective, we shouldn't forget to place the proper stop loss order and as well as the limit when it comes to the profit taking. In other words, we shouldn't approach the market without these orders to avoid the situation in case the market is going against us, we are losing a very significant amount compared to what we were expecting, meaning that we have to have hard stop loss in place instead of trying to use the mental stop, something we were discussing in other videos. And again, today we have only introduction into that method, and the Wyckoff trading strategy requires continuous learning and practice. Traders should constantly refine their skills and adapt to the changing market conditions. Please keep in mind that the Wyckoff method is complex and may require a considerable amount of the study and experience to apply successfully. It is also essential to combine it with other technical and fundamental analysis tools to make well-informed trading decisions. Additionally, be aware that trading always involves risk and you should never invest more than you can afford to lose. With that being said, wish you a great next trading session. See you around, take care and goodbye.